Hello everyone, a very good evening. Welcome to Oliveboard. So this is the CAIIB Foundation July 2025 series for the BRBL paper in which we are covering all the units module wise, and today we have the unit 25, which is the Contract Act of 1872. So this act basically it covers all the provisions of the meanings and essentials of a contract. We know under the Contract Act there can be a general contract and some special contracts. So our syllabus talks about those special contracts like the contracts of indemnity, guarantee, bailment, pledge and agency, right? So let us discuss what are the essential features that make a contract or a agreement a valid contract. Before we start, make sure that you like and share the video because these are very important for your exam preparation. You'll get the complete idea and understanding of the unit. All right, so when we talk about a contract has two parts. First is an agreement, and second is enforceability at law. If two persons, two people A and B, A proposes something, a proposal is made by A. Let's say that A says, I'm going to I'm going to purchase you a car if you pay me rupees 10 lakhs. So that is a proposal made by A to B. And B, it agrees to pay rupees 10 lakhs for the car. So it is a promise that is made or something which is known as an agreement. So this is an agreement between the two people. Now, when this agreement is in a written form, it is signed by both the parties as well as it is legally acceptable. The agreement between the two is not something which is void in the eyes of the law. Then we will say that it is a contract. So, until and unless the agreement has enforceability at the law, the agreement cannot become a contract, right? So the contract means an agreement which is enforceable by the law, meaning thereby that the rights and the obligations arising out of the contract must be enforceable in a court of law. If, however, let's say this agreement between the two parties A and B was not related to buying and selling of a car, rather it was related to dealing in some illegal activity like say drugs which are not legal in India, then even though both the parties they agree to it, they sign it, the agreement isn't written, but it cannot be said to be legally valid in the eyes of the law, right? So if let's say the person B was liable to pay to person A, but the default, A cannot take it or they cannot file a suit against B because the court will simply say this is not a legal contract. So enforceability at law is important. So the agreement, what are the characteristics of the agreement between two or more persons to make it a contract? If those satisfy the following, it should be made by the free consent of all the parties. A should not force B to sign the contract using muscle power or any influence or blackmailing, right? It is made by the parties who are competent to contract. Both of these should be of the majority age. They should not be minors. Plus, none of the parties should be of unsound mind. All right. Then it is made for a lawful consideration. Consideration means both the parties are getting something. If A is selling the car, B has to make a payment, right? If any agreement is made without anything in return, then it is not a contract. It is made with a lawful object and it is not declared as void expressly in the contract. For example, in the Indian Contract Act, any agreement entered with a minor is a void agreement. All right. So it should not be declared as void. So this is the essentials of a valid contract. There should be an offer and acceptance by both the party. The promisor and the promisee should accept. Then it should have the free consent of both the parties. There should be a consideration. However, there's an exception to it. Like, for example, if the contract is signed by any relative, any blood relative out of love, that will also be considered as a valid contract. For example, if any person, if any mother, father, or guardian, they write certain money or certain property in the name of their daughter or son, right? So that will be a valid contract if it is written in the correct form, although the son or the daughter is not paying anything in return. Then it should be a valid contract and a lawful object should be there. It should be made by competent parties who are not minors and who are not of unsound mind. And there should be an intention to create a legal obligation. Now, when we talk about the contract, the relationship between a banker and a customer is a transactional relationship, and it depends on the type of transactions, be it the acceptance of deposit from the public, or lending, or investing. So, the banks and the customer are also entering into a legal contract. For example, when the money is deposited in a bank, then the relationship between the banker and the customer is of a debtor and a creditor, not of a trustee and a beneficiary. All right. Another example could be, let's say, the relationship between the bank and the customer becomes that of creditor and debtor simply when the customer has borrowed money from the bank by the way of overdraft, cash credit, demand loan, or term loan. When, let's say, the bank accepts securities or valuables, then besides becoming a trustee, they also become a bailee, and the customer who is keeping those goods with the bank becomes the bailer, right? If the bank is providing any ancillary services such as remittance, collection of check, then they're acting as an agent for the customer. For the hiring of the safe deposit, the relationship is that of a lessor and a lessee. So, depending upon the activity or the service provided by the bank to the customer, the different types of relationships can exist. Now, we'll be seeing some um, okay, these things we have already covered. Relationship of a creditor and debtor. When accepting securities, bailer and bailee. When providing ancillary services, acting as an agent. When hiring services, then lessor and lessee. So these points are very important for your examination. The institute can ask you, for example, a bank has provided the safe deposit service to a customer. So what is the relationship between them? Lessor and a lessee. Or the bank has provided the collection of check service, then the agency. Or the bank has accepted the securities and values for safe custody, then what is the relationship? Bailee and the bailer. All right, so make sure that you understand these terms. Now we are going to discuss about the first special contract, which is the contract of indemnity. The most basic example of a contract of indemnity can be insurance. Insurance. So when any person promises to make good the loss which has occurred. So if party A and party B is there, party B says that if any loss occurs to you in any activity, then I am going to pay for it. Similarly, this happens in the insurance policy. The insured person and the insurance company. So the insurance company, let's say in the case of a house insurance, a person has purchased the house insurance and the house has incurred damages due to a fire, and the cost which has the loss of money which has occurred because of the fire will be now paid by the insurance company. So it is, the insurance company is indemnifying the loss. So it is a contract by which one party promises to save the other from the loss likely to be caused to him. Right? So the parties to a contract, there should be a presence of all the elements. Then the it should be either written or implied. Promise to indemnify should be there, and only one contract will be formed. So the loss either by the conduct of the promisor himself or by the conduct of any other person. For example, if person A owns a car, person A owns a car, and person B takes that car, right? Then they're going to promise person A that if any damage happens to the car, then I'm going to pay you for it. And if that car goes into an accident, then B has to make good the loss, right? So this is indemnifying. The assured, however, must prove a loss, only then the indemnifier is going to cover the loss, right? So, there is the implied indemnity. Although the Indian Contract Act does not seem to cover the case of implied indemnity, still it is there, right? Also, the Indian Contract Act does not specify the actual time of commencement of the liability of the indemnifier. Therefore, the judgments have been varied with some high courts opening that the indemnifier is not liable till the actual loss has been incurred by the indemnity holders. This is one decision. Another decision that is taken by the high courts, they insist that the indemnity holder can compel the indemnifier to make good the loss even before he actually discharges his liability by payment, etc. All right. So basically, what we are saying here that the indemnifier is going to make good the loss, right? Then we have another special contract, which is a contract of guarantee. So the contract of indemnity also covers that the person who is promising to pay for the damages, that is the indemnifier, but there only two parties are involved. But in the contract of guarantee, there are three parties involved. There is the principal debtor who is taking, let's say, a loan from the creditor, and there's a surety. If, let's say, the creditor is not sure whether the principal debtor is going to repay the loan or not, then this surety will step in and say that if this person A defaults, that I am going to pay you the money, right? So this is a contract of guarantee. A contract of guarantee. It is a contract to perform the promise or discharge the liability of a third person in case the third person defaults. Again, the guarantee may be either oral or written, right? So do not get confused between the contract of indemnity or the contract of guarantee. You should understand the difference between the two. So the person who gives the guarantee is known as surety, and the person in respect of whose defaults the guarantee is given is called the principal debtor. The person to whom the guarantee is being given is known as the creditor or the beneficiary. Make sure that you understand these terms. For example, if this person A wants to take a loan of rupees, let's say 10,000 from B, but B does not know A very well and they fear that A might not return the money, then C, who is a good friend of A, they can tell B that if A in any manner does not return the money, then I will personally pay it to you. Right? So this is assurance is given to C by the surety, which is B. Right? So B lends the money to A. Right? So on the assurance given by C to the creditor, they are going to lend the money to the principal debtor, who is A. Right? If another point can be, let's say A actually fails back to pay the rupees 10,000, now the surety C has to pay on their behalf to B. So this is known as the contract of guarantee. All right? Yes. So this is the contract of guarantee. So the liability of the surety is coextensive with that of the principal debtor unless it is otherwise provided. So the surety is regarded as a favored debtor. This creditor cannot resort directly to the surety for the payment. Only if A is going to default, then the surety will step in and pay the money. Only if the principal debtor is unable to pay the debt, the surety takes the place of the principal debtor. Therefore, any sum of money owed by the principal debtor becomes payable by the surety. Even the interest that the principal debtor may owe to the creditor will be paid by the surety. All right. Now, why would any person act as the surety? Because apart from the expressed guarantee or contract, there's also the implied guarantee or contract that now this surety C can recover their money from the principal debtor. So this principle is also there. So basically, we are saying there are two contracts in a guarantee. Now, the guarantee can be of continuing nature, which extends to a series of transactions. So it is not limited to just one transaction, but to many transactions. Then what happens if the surety dies? Normally, the guarantee ends from that date. However, if in the contract that was signed between the principal debtor and the surety, the intention of the parties as regards the future transactions, it can continue. The people who the surety will hold responsible after their death to make the payment can be referred. Any variance in is made without the surety's consent. Let's say the principal debtor and the creditor are making any change in the terms of contract and the surety does not know about this change, then the surety can, it is acted between the debtor and the creditor, it discharges the surety as to the transactions. The surety can step out of the contract, right? If they do not know about the changes, if the changes have been made without their consent. In every contract, there's also an implied promise by the principal debtor to indemnify the surety. If the surety is making payment for the principal debtor, then the principal debtor have to later on make the payment. If, however, the principal debtor does not make the payment, then the surety is entitled to recover whatever sum he has rightfully paid under the guarantee, right? And the security which the principal debtor would have kept with the creditor, the surety will have the right over it at that time, right? So the security or the surety is entitled to the benefit of every security which the creditor has against the principal debtor at the time when the contract is made, whether they know it or know about it or not, right? So that is about the contract of guarantee. We also have the contract of bailment, pledge, and agency that we will be covering in tomorrow's session. Right now, if you want to study these chapters in detail, in depth, then you should join the CAIIB Super Elite Plan, which is the all-in-one plan. You'll get the live classes, mock tests, and the notes. So subscribe now and use the code VDAY, which is the Valentine's Day special, and avail 49% off. This is valid till 16th of February for your CAIIB subscription. So make sure that you join the course and start with your preparation. Also, you can download the PDF from the link that is given in the description box. And any doubts, any queries, you can let me know in the comment section. So make sure that you like the video, you share it with your fellow aspirants, and also subscribe to the channel so that you do not miss any of these updates. So thank you so much for attending. I will see you tomorrow. Till then, take care and all.